Good morning. Top Gun here, 3:40 a.m. Pacific Standard Time, Friday, April 2nd. The market is closed today, so this will function as the YouTube pre-market commentary for Monday, April 5th. All right. S&P 4000. Never thought I'd see this. I remember when I started the business and to capitalize on the Great Recession, the housing bubble that I saw, the impending implosion of the housing bubble, and the S&P bottomed on March 9th, 2009, intraday at 666. So from that point through yesterday, a period of a little over 12 years, we've had an annualized return of greater than 16%. It's been quite a ride. Okay, so the last 2 days we've been led higher by tech. Tech, which took the brunt of the correction from the February highs to the March lows due to rising interest rates, has bounced back with a vengeance the last 2 days, with the Nasdaq up 1.76% and the S&P tech sector, the XLK, up 2.01% yesterday, leading the market higher. So the S&P obviously made a new all-time high, closing high yesterday at 4,020. And while the Nasdaq has not, it has broken out of the wedge defined by the declining trend line from the February highs and the inclining trend line from the March lows. And so the technicals there look bullish to me as well. The problem with tech, as with so much of the market, is valuation. So if we take Microsoft as one example, a truly great company with great fundamentals, a cloud business it's in a secular growth mode. It's trading at an enterprise value to 2020 diluted EPS multiple of 35 times. So that's probably about 35% too high. So the stock is probably 35% overvalued on what might even be peak earnings. So if we do have a recession or anything like that, it's even more overvalued than 35%. Okay, so moving on to, let's see, did I get these out of order? I did. Okay, so the next section is called CarMax and the reopening trade. So on Thursday morning, used car retailer CarMax reported earnings. Now, CarMax is a member of the S&P 500 in the consumer discretionary sector, where it has about a 0.6% weighting. It's a $20 billion market cap company, and it's a absolute perfect example of a reopened stock, of a company whose business it promises to benefit substantially from economic reopening as the coronavirus is contained via vaccine. Now, the problem is that CarMax had run up 44% this year through Tuesday. Yes, 44%. And they reported a mediocre quarter for the quarter ended February 28th, 2021, with used car revenue comps up only 0.6% and EPS down 2.3% to $1.27 a share. So it took a drubbing yesterday, down 7% on 3.5 times average volume, but it's still trading at 23 times earnings, peak earnings for the year ended February 29th, 2020. So the four pre-COVID quarters. It's overvalued, like so much of the reopened trade. So we've got that. We have the conditions as far as valuations are extremely extended for a top, although, as I just mentioned, technically the market seems to be pretty somewhat strong at the moment. Okay, finally, let's talk about economic reopening and surging inflation. So, investors are right to be excited about the economic reopening and what it means for the prospects of the businesses of the reopened stocks. This increase in economic activity is going to be good for their revenues, their profits, etc. But what investors aren't counting on is that already percolating inflation is likely to surge with the increase in economic activity and consumer spending. So I've included charts here of the GSCI Equal Weight Commodity Index, which is already more than 20% above pre-pandemic highs. I've got a chart of prices paid by a bunch of surveys from, hopefully I can pronounce his name correctly. If I can find it here, Ronnie Stoufferle. Nice tweet. I recommend you check it out. It's got a lot of charts in there. And so we're going to see inflation pick up even further from where it is right now. But fortunately, there's a great way to play this, and that's via the precious metals, which have been essentially left for dead by investors. You can look in the blog for my specific plays there. I will see you guys next week. Have a great weekend.